Hey, good morning, John. Morning, Kimberly. Morning, everybody out there. How's it going? Another just kind of floating along day in the market looks like so far. Hey, Jeremy. Hey, Valerie. Morning. Glad to see everybody. If you're brand new, make sure you give me a shout out. Let me know you're brand new tuning in. You will have to subscribe, and I have that turned on because we got some bots. So you have to subscribe to be able to comment and in the chat. And while you're at it, you might as well hit the little bell with the notifications so that you get notified when I go live again on Monday. And every day I try to do this. So I do have a Good Friday thing planned for next week. Crypto-centric maybe. So even though the market's closed, the general stock market, crypto market will still be open, and I plan a special crypto thing next week. So just giving you a heads up. And so what do we got today? Well, let me pull over a few things that I want to talk about. First off, saw this on Wall Street Journal this morning. This was a survey talking about American values. And I know not everybody that watches this is in the United States, but a vast majority are. I am. And this speaks to me because look at this. Patriotism was on a decline, and then after 2019, all the stuff we've gone through, patriotism dropping. There's this percentage of people who think these values are important to them. Being an Eagle Scout and spending a lot of time with veterans, this is, golly. I spend a lot of time trying to help veterans and got veterans in my family. Patriotism is one of the core values to me, and it's kind of sad to see that dropping that drastically as a core value for American people. And religion has been drifting off for a long time. Having children, though, look at that, dropping down as a core value. I mean, that's a big decline from 1990s to the 2020s, and then really taking a dive here. Community involvement, look, it was on a big upswing and plummeted down about 20%. Yeah, here, there you go. There's the chart. So, money as a driver, patriotism dropping off, religion dropping off, having children dropping off, community involvement was on a rise, dropping off severely. I think COVID and everything kind of broke something in a lot of people. And then money as the motivator, continuing its rise as a core value. I'm not sure how money is a core value, but yeah, that's apparently these are the things that are not bringing us together anymore right now. But money, well, that's why you're here with me, right? Can't complain about money too much, but I don't see it as a core value. It's just one of those things that it's not necessarily that I need the money. It's all the people that I owe money to want their money, and that's why I got to charge for things such as getting in Discord and participating with me. But we try to get more money. So yeah, but I mean, the drop off is pretty severe, and really, what's it going to take to fix this in our country? I don't know. I could speculate, but I've been reading some stuff about World War II, and this was kind of the same sentiment we saw back then in our country before we got involved in a big war. So, a little bit scary, if you ask me. Hey, morning, George, Jeremy, Shane. Anyway, yeah, money's a tool, not a... Anyway, RH, I still am not super familiar with the RH brand. Apparently they're a upscale home furnishings company. They were on the Morning Monster yesterday. Provided weaker than expected guidance yesterday. And why I brought this up was because the CEO here, what he had to say during the earnings call caught a lot of analyst ears. Here's the guy right here. He said, look, it's not rocket scientists. We're having a bad time. It's just like, this is the economy he's talking about. And in fact, we've been in a massive housing recession the past year. Who else has said that? Right here. So it's like we went to the same school of market thought here. He says, I've been on the planet long enough to know this is not normal and this is a dangerous situation. He's talking about Janet Yellen and the whole banking situation. I mean, anybody that thinks it's not a big deal that 3 banks went down is living in a euphoric view of the world. Despite what the administration wants to say, I mean, it's a big deal. It really is a big deal. That's why I said I don't think that the all clear has sounded yet. And he's recommending that the politicians just try to land the plane. They talk about it's going to be a hard crash, soft crash, whatever crash. Let's just land it, Let's not crash it. Let's land it on the other side, whether it's bumpy or whatever. Just don't crash. If we do a crash, this CEO's opinion is it's going to look like the 70s and 80s and take a decade or longer to recover from. I don't know. I think we're kind of in a position where we could go to a new all-time high before we get that crash. And we'll jump into the charts here in just a minute. So anyway, I just thought it was interesting. That's a CEO talking during the earnings call, saying all that stuff. So that's a little bit of reality that doesn't usually get said. He said the stuff that most people won't say on an earnings call. CFTC, this is Commodities and Futures Trading. CFTC, they kind of regulate the futures market. They're seeing an aggregated buy-side positioning in the negative zone here. So actually net short. Now you might say, okay, JT, what does that mean? Beth said that yesterday. What does that mean? Well, who holds futures overnight? I certainly don't. A lot of retail traders day trade futures during the day, but they will not hold them overnight because the margins are like 10 times, 20 times more to hold futures overnight. So you got to be kind of a big player to hold a longer term futures position. Now, there are, I'm not saying all retail traders out there will not hold futures overnight. There are sometimes when I'm playing the micros, I will hold one overnight because the margin's like $1,000. But to hold a regular ES contract overnight gets to be $10,000, $11,000 of margin. And if you're going to hold multiples of those contracts overnight, keep multiplying. You got to have a pretty big account. Now there's some rules and tricks and whatever deals, but for the most part, if you're holding umpteen thousand contracts, you're going to have a lot of millions of dollars in your account to hold those contracts. Now the net positioning that's being held open went negative, and it was the first time it went negative since November. Could this lead to a deeper pullback? It could, or it could lead to a spike like we saw back here in 2020. Now, we haven't seen a lot of negative positioning. We saw it in 2020. We saw it worse here last year into October, and then we shot up, and then we've come right back. So the positioning in the futures is more, it was more negative here than it was in COVID, and we're going negative again. That could mean that these leveraged funds and other people are too short, especially if we're going higher. And right here, another way to look at it, leveraged funds, just leveraged funds right there, reporting negative $40 billion. They're going short $40 billion worth of exposure just in a week. That's the weekly position change. That's liquidating longs and adding shorts right there. We spiked down here. I mean, look, we don't even have one back here in 2020. Something to think about. We could see a mega squeeze. Now, looking at this right here, you may not have ever seen one of these charts before. It's kind of the max pain levels. We have everybody kind of stacked up at 4,000 here. We have a large call wall for today's expiration, sitting here about 40.65. And the large puts are really down here. And it creates this zone right around 4,000, which is right about there, right in here, where traders lose the most money and the market makers come out the best. So that low spot right in here This is like market maker exposure. It's how much money they stand to lose as price gets away from this 4,000 area. So we may not see a huge move in the market until after today's expiration. Now right here we have the S&P 500 3-day chart I usually show. We're popping up above the roadmap line, above this candle, right into that high right there. We need to get above that to go test this high up here from February. All right, just keep in mind the big picture, but so far this thing's kind of playing out the way I expected. We're inching higher. We can suck in a lot of money. Now, on the ES chart, this is an hourly chart, and for the last few days, we've just been trucking in this channel, still hanging out right in the middle of the channel. I do kind of expect the next move to come up to the top. Last move didn't, though, kind of rolled over, but it had the monthly pivot right there. We are above the monthly pivot. We're significantly above the weekly pivot that we hit. Like back on Monday, I said we were likely to hit it and then go higher. Well, we hit it and we're higher. That tracked all week. And we're likely to come test the top, but we can easily roll off and hit the bottom one more time. All right, just keep the parameters in mind. I'm kind of cautious on what happens next. We don't have any big catalysts today. There was PCE, but it didn't really move the market all that much. So, as always, all trading involves a substantial risk of loss. Past performance, not necessarily indicative of future results. This presentation here, informational, educational, and fun, is not a recommendation to buy or sell anything, financial instrument, or otherwise. If you desire personal financial advice, hire and consult a financial advisor. Yeah. So our core PCE that came in today, just kind of expecting a 0.4, got a 0.3. Personal income, expecting a 0.2, got a 0.3. Personal spending, expecting a 0.3, got a 0.2. Just kind of just floating along there. Caused a little bit of chop right when the numbers came out, but not much. So we have consumer sentiment coming out at 10. That may, it's rated orange. It may or may not cause a little blip. If the numbers start jumping real quick at 10 o'clock, that's your consumer sentiment coming out there. And also inflation expectations. So, but that's not the official one. That's the University of, whatever you call it, Michigan. Yeah, University of Michigan. All right. Click the close button wherever that went. Right there it is. Now, on the calendar for next week, let's pop back up here. Happy April Fools tomorrow. Next week, on Monday, we've got some ISM manufacturing PMI, construction spending. Tuesday, we have the JOLTS jobs. Wednesday, we've got non-farm employment change. Then Thursday, coming in with unemployment claims. And Friday, we've got non-farm payrolls and unemployment. So, kind of an unemployment week next week. Let's see. Restoration Hardware, RH. Wonder if those sentiments, yeah. Paradigm shift in banks where instant interest rate access. Yeah. Banks are not keeping up with the MMS sweeps. Yeah. I don't know, man. We could be in a paradigm shift. Maybe not. We'll see. Time will tell, as always. Let's talk about what's actually moving today, though. Let's jump into the actual live charts. Kind of, speculated that we could see a pop right up in here. Just get above the tails overnight, pushing up just a little bit. This is going to lead to this to rally right back up here on ES. Looking positive so far, right here today. Watching for this gives me a bullish bias. I usually do my bias right at the end, but this kind of gives me a bullish bias that we rally right back up here to about 4180, 4200. If we can break above that, not just stop right there like we did back here in February. If we can get on the upside of this line, probably going to come up here to this 4300 box up here where we found resistance in August. All right. If you haven't been here before, that's the game plan. We're looking for a rally up to 4,300 and then potentially a pullback before we can break on through. But we're going to see. All right. Keep coming back. I'll keep you updated on the day-to-day. This is a longer-term plan, maybe a couple weeks, maybe a couple months. April is historically one of the most bullish months of the year. We've talked about that the last few days on the seasonality. So We pull up the morning market mover list. NQ into the red zone. We're probably going to chug right up to the top over the next couple weeks, and then test that resistance at 13,800, 13,800, where we kind of topped out back here in August. Again, lots of stuff looking strong into that August high. Russell is lagging, severely lagging. This is mostly on the back of the small banks. This one can very quickly accelerate and try to catch up. That's something to keep in mind right there, that it may outperform on this next move as it tries to catch up with the ES and NQ. That's your small caps. A lot of the smaller regional banks are in the Russell, and that's what you saw reflected right there. And they're not out of the clear yet, so this may continue to be a little rough. Dollar still finding a little bit of support right there at the lows. As soon as it breaks on down below about 102, 101, we're probably going to see it accelerate on down toward the, to a new low, at least to the 100 area, and probably down into the mid 90s. Rumble showing up again. Looks like the market just opened. Rumble showing up, popping, trying to get through this resistance. It's got highs right here to break up, highs above here. Gets above that 1050 area, we can see an acceleration higher on Rumble. So definitely want to watch out for. And the next kind of resistance zone up looks like it would be up in this $13 area. So that's like a 30% gain just on some shares. Not too bad right there. Not too bad a play but I would wait for it to break up. Don't just jump it now. It can easily refill this gap it just made today. It can easily drop back below those highs, find resistance right in there once again, and do another one of these dips. ADA making the list, trying to pop above. It's got resistance right there. We're right at the resistance. We get above that, we can see bigger rallies up into maybe the 50-cent area where we topped up here. That's for Cardano. I know Goose, that was one of your big ones for a while. We're well below $1 there. MCB, this one's showing up as a little bit of pop off the bottom, but looking like volatility. I would be very careful trying to chase that one and catch the knife. You can get another one of these bloody knife drops to a lower low. Netflix churning. Still can't beat that 618 yet. And we talked about this one a little bit yesterday. Patrick, if you're here, haven't gotten the break above the 618 yet. Still finding some resistance. We could see one more dip back to the roadmap line before this one's able to break on out and get on the path to go fill the gap up around 500. Want to see a nice big strong green candle breaking above, getting out of this zone, set us on the path. We get above this 378 zone, probably on the path to 500. And it could take a while. I mean, it could take out to late summer or longer. I mean, we could get a pullback in there before the big run higher. DWIC getting a pop off the lows, but that still looks like horrible, bloody, nasty, going out of business type chart. PKX showing a nice pop on, what is this? Energy minerals, steel. Just showing a nice pop and potentially getting above this resistance here. Working on it. If it can hold up there and not just start breaking back down, I mean, we're way up here. Looks like we're going to rally right back up to these highs. So know your position. That would be a potential play for a rally up to this $80 area with that strong move up. And really, the first indication was these closes above these highs. Caution was advised there, but get a pop up here, and it can just keep on popping. So that looks pretty good on PKX. CYTX, this is a pharmaceutical, just getting chopped. And that chart actually looks pretty bad, even though it's getting a pop today. TRMD, right to the roadmap line. A bounce here, can take it higher. That's marine shipping. Marine shipping going through a little consolidation, but we can take a next leg higher on that one. ENPH popping up today, but still in the downtrend. That one keeps showing up as a overnight mover. Gets a little overnight volatility, but it's still in the downtrend. be careful. AAP made the list for a little bitty pop. There wasn't a whole lot moving this morning pre-market, but that is looking pretty bad. The lowest low on this chart right here just a couple days ago. I mean, this is looking pretty bad for Advanced Auto Parts. WB, Weibo, however you say it, look, Chinese something, right? Chinese internet software. It's kind of like Baba and all those others getting a little pop. Has potential to go extending out of here. The move would look something like this. Way on up here around 40. And the entry, potential entry right there as we get above that consolidation. You see how it consolidated right there? Zoom it up so we can see better. We consolidated right here. Consolidated right here. Again, same area. Dipped. If we can break above that, so back above 23, 22, 50. We get a move up through that. Probably heading up to this $40 area, which just on shares, that's almost a like 45% gain, something like that. Pretty good opportunity right there. I would definitely keep my stop right down here around 19 if I was going to chase that. And then as soon as it moved up away from this zone, put my stop right up here above this consolidation around 22. And then as we broke higher, move my stop up above those highs right there. If that's something you're into, that's how I would play it. APLM, just chopping around. It was popping, but now it's dropping. Probably looks like it's going to come back down to where it was hanging out before. Not a whole lot of information on that one. TMF, Treasuries, still looking pretty bearish, despite a little mini pop overnight. That little consolidation there is kind of bearish underneath the roadmap line. Downtrending highs. Looks like we're going to push lower. And months ago, I kind of speculated that we may see a push lower on TMF. Gorilla Glue, man, that was a drop. Not sure what they announced, but doesn't even show up on here. Whatever got said about Gorilla Glue, that was a hit right there. And not a high price stock, so be careful. Be careful. Yeah. NIO, Intel. We can look at Intel. I don't think it's moving a whole lot, but we can look at it. Yeah, not really moving. Not really getting sparky, so nothing to really look at today. It has to break out over the highs. It kind of hit resistance. Probably going to retrace back to the roadmap line again. NIO. Come on, NIO. Keyboard. Work. NIO not really moving either. Not good pre-market movers right there. So don't expect much out of that one either. That's not, unless you know some pending news, that's not really a big mover for today probably. Apple continues to work higher, probably on its breakout to 200. Keeps pushing up through. This one can get accelerated on next week as we head in the new quarter. So we're in that resistance on NASDAQ. Big tech's probably going to slow down a little bit as we try to get to the top of that. S5FI come up almost back to the middle. That's the stocks above the 50-day moving average on the S&P 500. We're at 40 yesterday, probably approaching 50 today. 80 is probably where we're going to top out. May poke out at the top if we get overexcited, but just kind of working in the middle here. That's the typical for the stocks above the 50-day moving average. So that's what we got for today. My bias, like I said, bias a little positive. Probably going to rally right back up, test these highs from back here in December and in February. And it could take a few days. It could take a couple days, couple big days, but yesterday was not a continuation. We didn't get another big day. Didn't get another big pop. So that's indicating we're probably going to drift up there, and barring some kind of exciting news, which we already went through. Most of the economic news is not too exciting. So what else do we have out there? I don't know. Right now, don't see a whole lot of catalysts, so we'll probably just drift higher. Just kind of do one of these like drift deals until we get something that gets everybody excited, or we get to the point where some funds have to dump some big money back into the market, get exposure long, and then we'll accelerate higher. All right. that's what we got for today. So make sure you're subscribed. Click the bell with the notifications to make sure you get alerts when I go live again Monday at 9:15 a.m. Eastern Time. And if you want to continue the conversation and what changes during the day today, come join Discord. Links in the description if you want to do that. All my other members, I'll see you there. Have a great day, everybody. Have a great weekend, too. Try to spend some time with those you love. Work on those values for Americans, you know. Have a great day, everybody. We'll see you later. Bye for now.